Welcome back to the channel. I'm Foreman, and this week I'm going to be showing you the UK stocks I'm buying right now, and obviously how hard my portfolio has dropped. Seriously, in the last 7 days, if we scale out even longer than that, it really is not good. And at the moment, the only thing comforting me and keeping me warm is my Boohoo Man shirt. Other than that, it's all gone pretty south. And if you like the video, please drop one of these to help beat that YouTube algorithm. According to Google Finance, the FTSE 100 is down 0.35%. The FTSE 250 is down 2.68%, and the S&P 500 is down 2%. This seems fairly reasonable. It seems like quite a red day in the markets this week, although my portfolio has massively outperformed in terms of the fact that I've massively underperformed by having a much lower percentage number. My portfolio has fallen by 10.98%. I didn't think I'd see a day like this, but I am very much happy with this. You may wonder, your portfolio, you've just lost 10.98% of your portfolio value. Why are you right now in a good mood? Surely this is going to negatively impact you, but truth be told, I'm not bothered by the volatility of my portfolio. I only invest money that I can afford to risk and money that I don't need in my everyday life. And so this money is something that I can just tuck away and leave. It can drop as much as it wants. I always have a plan in mind, and this is partially part of why I am very much happy and comfortable with the current volatility. In fact, I was taught how to build a plan by reading this book, The Art of Execution by Lee Freeman Shaw. This is a book on how some of the world's greatest investors got it wrong most of the time, but still made millions of pounds. If you're interested in this book, I'm going to leave a link in the description down below. But basically, the main concept of this is there's 5 different types of investors. You have the people like the rabbits that just sit there, their stock drops, but they just push it away. They try to forget about it. You have the assassins that are ruthless with this nature. If their stock drops 20%, that's it. They will immediately cut their losses, and that's it. They'll forget about it. And then you also have the hunters. The hunters are the kind of people that have cash on the sidelines, and that when their stock drops, they slowly add a bit more money in. And that when their stock drops below 20%, they substantially lower their average price so that they are then well positioned for a future recovery. The whole point behind this is that you have to be very much careful with your position size, and because how much you are really going to be putting in this when this stock is dropping, because it takes a lot more time and money to recover from an 80% drop, for instance, compared to just a 20% drop. In fact, you can visualize it in the way of years. If you assume an 8% average return each year, you could see how long this could take. And that's why I'm jumping straight into the top fall of this week. This stock is none other than Boohoo. Shares have dropped by 18.72%. And I am actually very, very happy about this. This is well below my average price, and I'm now under on the investment. This is a good thing, and I hope and I believe actually that shares should stagnate for the medium term, giving me a lot of time to average money into this investment and truly build it up, which is something I look very much forward to. In their results, it was a lot gloomier than I had even expected. Revenue had only grown by 20% year on year. Their adjusted profit before tax was down 20%, and they also only had £98.4 million in net cash on the balance sheet compared to 246.5 million in the last year. However, we know a lot about this. Obviously, they're investing a lot into the UK, plans to invest £500 million, creating 5,000 new jobs and increasing their overall supply capacity, I believe, to 4 billion in total sales per year. And that we also have the investments into the 4 big brands like Debenhams, Dorothy Perkins, Burton and Wallace. These brands are likely going to take time. They need to really reassess the management, really start to rebuild them up, and then once more bring loyalty back to them, because at the moment there is brand awareness for them, but they aren't necessarily going to be punching or pushing for very high growth. But at the same time, they didn't include the like-for-like growth of each of their brands, and so this means that us as investors, we don't truly know which ones are doing well, and whether it is just a widespread downtrend that we may have seen in the general market, or if it is one specific brand holding them down. which would have been a lot more interesting. And in fact, I feel that the way the RNS was framed here with the interim results, it framed in a light where usually companies want it to look very positive. They want that investor sentiment to be high. I think they weren't really bothered about it this time. And I think that from this, because they haven't really tried to make things sound great or exciting, even though it is actually some decent results when we think about how phenomenal 2020 was as a year for overall revenue and growth, because they had little to no competition when they were on e-commerce and a lot of the world was in lockdown. I think it is quite interesting because it means that they are maybe under-delivering and over-promising. No, that's the wrong way around. Over-promising and under-delivering. But the idea is very similar here. If they have quite a moody, toned RNS, this could lower investor sentiment further. Shares may struggle to recover in the short to medium term unless fueled by a director purchase. And I think we may see some director buys coming up very soon. And I think that would be a great way for investor sentiment to build back up again, which is something I don't actually want at the moment. And also just good for the overall owners and founders of the company, for instance. We also may see the ESG funds shift back into this stock because they are now probably the best in class. They are well ahead of the competition with their agenda for change policy. Sure, yeah, they were caught off guard with their supply chain issues, and that was a legitimate concern about a year and a half ago. However, now this really isn't a concern anymore, and that yes, they are still putting good amounts of attention towards it, and this is a great sign. And so these ESG funds might see actually this stock is very cheap on valuation and go, yeah, you know what, we should buy back in, and this all could fuel shares up in the medium term. As I say, I don't actually want this to happen because I want shares to remain stagnant for now, as their underlying financials and fundamentals are growing faster than the average rate of the market, and then I would just get a better value on my purchases. I think it is very promising. 2020 was a fantastic year, and they remain their guidance and of 25% CAGR of revenue growth on average each year is something that is a very hard target to meet, and the fact that they are sticking with that, I think, is a very good sign. Obviously, the freight costs and that of the problems that are going on worldwide, Games Workshop has said the same thing. This is temporary. Again, this will last the medium term. This is impacting everyone across the board, and so it should not be a legitimate concern. But the way they framed it in the RNS does make it look a lot more negative than it is, hence why I think there is a bit more of things going on behind the scenes there, and we may see that director purchase. They have a huge ongoing investments into their capacity and growth. This does have its own risks, because if you invest purely into capacity and then they do have that drop off of demand, then this isn't a good thing. It could certainly compound and fuel the company into a bad position. However, I think this is the best kind of investments they can make. They're looking to future-proof the business. They're looking for long-term growth and not just trying to chase unsustainable short-term profits. I think that is very promising. The demand has started to increase again in the last few months, and obviously there is still lots of cash left, and it makes them very safe. As I say, I think the price will remain stagnant for the medium term. I'm not one to guess where it may be, but what I will be doing is consistently buying shares. In fact, I didn't write down the number of shares I bought this week, but I did buy quite a considerable chunk. I'm guessing around about 200 shares, and I will likely continue to do so in the future. In order to fuel this acquisition, I did sell more shares of Ashton Group, which was 6 shares in total, because I feel that Ashton Group has had its use in my portfolio. I'm now using this as a cash position to then substantially lower my average price of Boohoo and accumulate more shares for the longer term. I even considered the same idea about my position with Team 17. Don't get me wrong, I really like the company. I did like their acquisition with Golf with Your Friends. However, I do also have a company that kind of indirectly competes with Team 17. We have Team 17 and we have Games Workshop. These two companies are directly competing for your attention, and so I feel that perhaps that money could be best used elsewhere in stocks that are falling in my portfolio. If you'd like to sign up to my stockbroker Freetrade, you can actually get a free share with up to £200 when you use my link in the description down below. In fact, I've been posting a bit lately on Twitter. If you'd like to follow me, it's at Foreman. I've also got an Instagram if you'd like to check me on there. And basically, I have been speculating a bit. I've been showing my portfolio. I've been showing how much I'm down over all the investments. And in the last year, I've massively underperformed the markets. In fact, I'm going to put the image on the screen, but it's something like the market is up quite a high amount on a time-weighted return, and my portfolio is massively negative. I have little to no concerns because I feel that your returns are really bolstered in your good years. Sure, you see these famous investors that are doing very, very well, and they have these very high CAGR growth rates of their portfolios, but I think that's fueled up by 1 or 2 very good years. I expect to have 4 or 5 very bad years. My portfolio could continue to drop for that long of a duration. I'm just going to keep consistently purchasing stocks, increase my main level of income so that then I have more capital available to invest, build up substantial positions in the portfolio, and then hopefully over the longer term it will do quite well. Another one of my top fallers this week was actually Games Workshop. In fact, screw it, all top 3 positions in my portfolio dropped by more than 7.5%. Games Workshop was a bit of a surprising one actually. Their RNS update on their results was very bland. They didn't go into detail about anything, just said in line with expectations, but there were some concerns over a few costs such as freighting and worldwide shipping, much like the same with Boohoo. I in fact went into a Warhammer store the other day. It did feel quite warm and welcoming, and I will actually be interested to check that out, go in as a beginner and see what they can offer me. But this is something I still remain bullish on. Obviously their dividend was slashed, but that's fine because I think now they'll have more capital that they can reinvest back into their business, and I think they will see the value in that. Don't forget they also have only truly surplus cash distributed as a dividend. It means if they've got the cash available and they're keeping that just for emergencies, I think that makes it a much safer investment. And then we also have Argo Blockchain, which has had its fair share of troubles in the last month, fueling my portfolio downwards as well. This is a stock I remain confident on over the medium to longer term. I believe they got another shipment that will be delivered in Q1 and Q2 of 2022 for more Bitcoin mining capacity and miners, and I believe it puts their overall capacity up by 2 EH, which I think is exahash. I actually am doing this from memory, so I'm not too sure, but this is good. This is promising for the longer term future, and we may have some good growth coming from that stock. Although it's just a question of right now is I've got Boohoo down, I've got Games Workshop down, and I've got Argo Blockchain down. Which one do I put my money into? At the moment, I'm leaning much more towards Boohoo and even Games Workshop, because if that drops below £95, I would very much be interested. But then Argo Blockchain, my average price for is still quite on the higher side. And when it does recover, or when it does have that Texas facility completed, perhaps that's where the shares are going to go to, and I would have only have broken even. So now, whilst the shares are cheap, perhaps now is the time to average down on my investment, and maybe that would be a better approach. But then at the same time, Bitcoin could also drop, making it quite a difficult strategy. As I say, to always have a plan. My plan in place was that if Boohoo dropped, I was going to buy more shares. If Games Workshop dropped, I was going to buy more shares. Unfortunately, the thing I did not place in this plan is building up a substantial cash position, because I've been spending it going out, drinking, and to be honest, I'm hoping to break out of that cycle very soon. I know I said I was going back into monk mode. I've actually quite improved the process quite a bit. I'm not drinking on any days but Friday and Saturday now, and it means I am saving quite a bit of money, but even then it's still not the greatest. I'm hoping to increase my main source of income, as I mentioned earlier, with hopes that more income means that I'm not going to fall for lifestyle inflation, but it means I can invest more of it before it even gets into my bank account. And I hope you like this video. I've tried to be as transparent as possible as usual, and I'm in a very optimistic mood for the next week, not because I think shares are going to go up, but instead I'm quite happy to buy a lot of shares next week, and it will be very fun for me. Have a fantastic weekend. If you'd like to see my free UK stocks to buy this month, click the card at the top right of the video.